All right. We're
Oh,
hot. Hot
great.
mic, Matt. Hot mic. Watch your
Ah,
mouth.
Mike.
Watch out. Watch
That's not
out.
true. You don't have to watch your mouth. Gabe is like the
I'm the
swearer on this
worst.
podcast for sure. Yeah.
I'm the worst.
Yeah, you're in no place to tell people to watch their mouth.
Right.
You
So
got
Matt was just giving us shit because we haven't recorded since January 30th. So fair enough. Uh,
Yeah,
Rodney and I
but
have a plan.
we
I
do have a
hang on
plan.
weekly. I hang on weekly to listen to this podcast, and like I've been waiting in January 30th, right?
Yeah.
As of just week by week,
Is it,
nothing happening, right?
You're
man, it's
one of
really
the
January 30th.
probably, man. It,
Oh man, time
Listen,
flies. I thought it was
it,
like, we try to do this every 2 weeks. In my head, I thought we were like 3 weeks going on
three or
four.
4 weeks
And we were
behind.
like
Yeah.
seven.
That's what it feels like.
Oh
Yeah.
man. Yeah.
Um,
time flies by.
Yeah.
I mean,
Hey,
by
yeah, go ahead.
no, you go.
I will say, I don't think Matt's our only listener, Gabe. There were other people upset with me. I went down to the Illinois Grain and Feed meeting.
Yeah.
I want to say 2 weeks ago, but now it might be 10 years ago because time,
Yeah. Yeah.
whatever. And man, it was fun. There's lots of people down there that were like, "Oh, hey, you're the podcast guy." Like, it
Yeah.
was crazy. People I didn't
I,
know.
I mean, I think we're close across everything. I do think we're close to about 1,000, like on the best day.
I was going to
Um,
ask you that. That's good.
but most of them are in Illinois with our couple of Argentine, or I shouldn't say in Illinois. They're in the Midwest with some Argentine listeners.
Hmm. Yeah,
Um,
that's cool.
but
I I just had to update my website for my business, and I decided somebody said, "Hey, you should link to your podcast on there." So I set up an RSS feed on my website that pulls them in automatically.
okay.
And anyway, it made me look over our top episodes. So, do you know what our top episodes are? Like off the top of your head?
No,
Oh,
Yeah, Heather Gieske actually the top episode. So
that was
really?
a solid
yeah,
episode.
it
That
was
was
a good one. Yeah. And then second was Dean Durden, talking about grain merchandising, which I really enjoyed as well. So
yeah, that was really helpful. Um,
Nice.
Jake Maurer, former podcast guest, starts working with me at Little Leaf Farms on April 1st.
that's awesome. Oh man, that's fun. He's a fun dude to work with.
Yeah.
Nice. Nice. Yeah,
Things are going well over there.
you guys have a small contingency here in Illinois, right? That small ex-Cargill employees, uh, people that
That,
you've had on the podcast before. Like I keep running into that circle of guys that
it,
listen,
it gets a
but
little
it's
bit
that same
bigger.
circle, right?
Yeah.
It's like, man, there's a lot of ex-Cargill in there in that circle,
Well,
Yeah,
right?
you could definitely build our resumes by looking back at the people that have been on the podcast.
Yes, yes.
I think that speaks well for us.
Yeah, yeah,
Yeah, at
right,
least we
right.
didn't
I think
annoy
so.
everyone.
Most of the people we work with are happy to talk to us again.
Yeah,
Ronnie, do you want to introduce Matt?
yeah, yeah. So happy to have Matt Webster on the podcast. Matt is with River Valley Co-op. Matt, I'm going to make you in a second, kind of take us through your history or whatever. But I will say, I kind of left Cash Grain for 6 years, right? Then I went to
Yep.
work for Indigo and did some other things. And when I came back, I was thinking about firing up this new company and this new business that we talked about. And Matt was actually one of the first people I called about it. But when I came back, I called a bunch of farmers and was like, "Hey, who are you working with these days? Or what's the landscape work look like?" And every one of them mentioned Matt Webster's name. And I was like, why? How do you know Matt Webster? He lives 200 miles away from here. But man, to say he's a go-getter would be an understatement for sure. So, Matt, welcome to the show, man.
Hey, thanks. I appreciate it. So, yeah. No,
Yeah.
my background is, went to University of Missouri, graduated there, end up immediately up in central Wisconsin, working on a sales and management training program for, at the time was UAP, which was a little bit of everything, right? You got stuck in a sprayer, you got stuck selling seed, you got stuck cleaning tanks out. And so you got to learn a
Yeah.
little bit about that industry. It was primarily vegetable crops. So I would say
Hmm.
it wasn't the most enjoyable experience I had, but it was very much that you learned a lot, right? On the industry. Then kind of moved to the Madison area, was a rep for a seed corn company for 6 to 7 years, and then got hired with Cargill, where I met up with you guys in that fall of '07, beginning of '08, right at the time the market was starting to take off from
Oh man.
$3 to $8,
Yeah.
and had a lot of those grain bins to start out with that other people had
Oh
signed
man.
up that
Yeah.
you had to not navigate through, and then the financial crisis happened. But so I stuck with Cargill. I was there. I was with Cargill in primarily the same role, but bouncing around from what territories you cover and how big your territory was, and up until 23, and then in the fall of 23, I had an opportunity to kind of set up customer relationships and different types of platforms with River Valley, and decided that was a great opportunity for me at the time, and went to River Valley and still get to do what I enjoy, is work with customers and do different types of products and help them manage risk, and it's an enjoyable job for me.
Yeah. Man, that '08 through, I don't know, 2012, I'd say '08 through 12 for sure was
Yeah, say through
like
12, 13.
20 years worth of experience,
It
gained in
was
4 years
fun,
there.
man. It was fun, right? It was always
Yeah.
exciting.
But it's funny looking back on those days, and like as I train new originators, they'd come to you with, issues that come up throughout the years. And just always in the back of my head, I'm like, man, that's nothing. Like we could definitely deal with this. This is nothing on what we dealt with.
We were kind of talking about the oil crisis and stuff like that. We're going through, at the company yesterday, we're going through just risk assessments with customers and what they have on and stuff like that. And
Yeah.
we went, your mind kind of goes back to that '08 environment where you said, hey, guess what? Literally said, yeah, we're not going to stop buying grain. We're going to keep buying grain. And 2 weeks later, they go, hey, we're not going to be
Turns
able
out,
to buy grain.
turns out.
Oh my God.
Uh, well, we were having a conversation. So Matt, I work for a lettuce company now. We try to keep the
Yep.
lettuce talk to a minimum, but we everything goes in these plastic buckets, right? Is what we sell it in, and so it was like, hey, that's PET. Like, you need crude oil to make PET. Like, I think we can make it onshore. Apparently, we buy, as a country, we import a lot of PET. Was like, we sure that there's enough there? Like, and everybody's like, yeah,
Mm,
everybody's on this fine. Like, so I was like, okay. I was like, I've kind of been through some of this stuff before. Everybody says it's cool, like up until the day that it's not.
yeah, exactly.
Uh,
Yes.
yeah.
So no concerns. You're good.
I I have many concerns. I'm not the head buyer. Like, I'm not running operations. I've shared my piece
Yeah.
and discussed, decide, support, baby, the old Cargill model. So it's just, but it's one. I mean, obviously, most likely there will not be a problem, right? Like, that's the
Yeah.
most likely outcome, and so I don't need to run around. Like, I trust that they're going and validating that whatever supply chains are in place and all that kind of fun stuff. But it definitely raised some previous trauma, right?
Trauma.
Yes.
Trauma's all right. Yeah. Well, if you need any help on that, Gabe, I know a guy. If you're unsure, let me know. I happen
You
to
know, a
know him,
guy
which is
who knows how to convert, who knows how to get PET and convert it into a food safe package.
I'm not sure he's in the conversion business, but
Okay, but if we
I
need the
believe he
PET,
has a warehouse of PET. Yes.
okay,
Yeah.
great.
It might be sold. I have no idea. I'm not in that
All right.
business.
Well, if we get there, I will absolutely be texting you. You'll know if we're in trouble.
Yeah.
Rodney,
And
where's
then
your
we
PET guy?
and then we can have him on the podcast. See,
Yeah,
this story just writes itself. It's
yeah,
perfect.
um, yeah. Well,
So
so
my
so
fate, my I'm
oh,
sorry, my favorite
no,
part of grain and feed. This girl comes up to me. We were at dinner, and so it came up that we had the podcast, and she realized what it was, and she's like, "Oh yeah, I listen to that podcast," and I was like, "Oh, that's cool, great to hear." And she goes, "Yeah, it'd be a lot better if you guys just got to the point like right away." And I started dying laughing. I'm like, yeah, maybe, but it would be a whole lot less fun. I don't
right.
know what I think about that. So I gave her permission. I'm giving everybody permission. Just fast forward 30, 35 minutes in, and
Yeah,
you can skip
you'll
all
get it.
this. Yeah.
That's pretty funny. I was really hoping you were going to say she had a view on the firefly problem.
No mention of fireflies.
No.
This summer, we're going to retackle that again this summer for sure.
Okay. Um, we haven't talked in apparently 8 years. So
Yeah.
anything interesting happen? Anything
Oh
notable
man,
happen?
grain market's been on a tear. It's been fun. It's I'd say
Okay.
since the last time we talked, and Matt will have stuff to say about this. The like what am I trying to say? The demeanor of farmers has changed significantly from like kind of the end of the world to at least a little bit of optimism. Nobody's printing money here for sure, but definitely some optimism in the world. You agree with that, Matt?
Yeah, no,
Yeah.
I think that last week of February, that first week of March, leading up to it, you had the grain markets really rally, and I think you got everybody kind of caught up to where they kind of wanted to be sales wise within that 2 weeks, and then the farmer sentiment has been like, I don't know where the next level is, and I don't know if this is going to take off like a Russia Ukraine thing,
Yeah.
so I'm just going to hold up now. I just
Yeah.
I just want to pause, and you don't know if that's right or wrong or
Yeah.
not right now, so. But yeah, it's giving guys an opportunity to price at some levels that are profitable and some levels that we haven't seen in 22 to 23 months. And it's probably a great opportunity to get caught up where you think you should be at least.
Yeah. Yeah. So Gabe, I don't know how much you're tracking it, but corn was 440 like forever. December corn was 440 like for the longest time. We were just stuck in that range. And there was a
Okay.
lot of days I was wishing for 440. And like today, I think new crop D's closed at 493.
I so what's funny to me is in commodities, especially in the grain markets, we're far more comfortable with volatility than the equity and in
Mm.
fixed income side of the world and currencies for that matter. Like most people in finance, like are scared of volatility, right? For them, so traders understand volatility means opportunity, right? So like
Yeah.
all the traders in that space understand that and they get it. But once you get outside of the trader, so starting with like a risk manager, but then everybody else, they hate it. They hate volatility. They hate asymmetry in behavior. Like they don't, they want everything to move nice and correlated and smoothly. They want whatever 0.02% a day every day forever, right? Like
Yeah.
that's um, and anything outside of that they get real anxious about. So I'm entertained, right? And obviously feel the same way about when you see markets moving, like, oh, like maybe there's a chance of something happening here. I do think there are things like volatility in our world, as we've hit on a number of times, generally means higher prices because it means like there's some uncertainty around production and things like that. I'll be curious as we talk today, understanding kind of what the vibe is around the acres. Like that seemed to be a pretty big headline. Oh, everybody's going to grow beans now. Nobody's growing any corn anymore. Like
Yeah, exactly.
burn them down. Turns out probably some corn going to get planted. I guess I don't know.
Yeah,
Uh,
that's right.
it was funny the waves of commentary where it was like, oh, it's all going to switch, and then other people going like, hey, people already basically set up their fields for corn, and like that's what's going to happen, man. Like,
Yeah.
but I am genuinely curious what you guys are hearing there. Yeah, but I'm not on top of it, right? Tell you, you know what, lettuce markets not super correlated to corn. When we
Is
so,
there a
How
lettuce
volatile
market?
is the lettuce market
no,
today?
let's be clear, there is no lettuce market, right? Like it does not trade. For us to change price with a customer, it is a multi-month uh, process.
Yeah.
So it's you're talking to a customer, which for us most of our customers are grocery stores, right? And saying, hey, whatever we need to move the price from here to here. Here's why, and they're like, no.
Yeah.
We're like, yeah, but these things, and so it goes back and forth. I mean, on the flip side, most folks are pretty reasonable. I would say I'm under the impression everybody seems fairly reasonable, and also unsurprisingly, nobody wants to take a higher price.
Sure.
Like
Right.
nothing new there or different or unique. But there's like a level of transparency on the cost side that people seem to operate with here that's way different than a commodity market where the price is the price And however you run to get that price, nobody cares.
Yeah, it doesn't
On
matter.
on this side, like it does matter. So I mean, there's an expectation that you're running with some level of efficiency, and that's what you have to talk to, because they're saying, "Are you raising my price? What are you guys doing to keep it down, though?"
Right.
So
And your answer is we just moved it all inside. We don't have to worry about the weather anymore, right?
yeah, that's it. No
Yeah.
problem. That is.
You guys still have fungus problems like they
Yep.
do? Yeah,
Yeah.
right.
They're different pathogen issues. They look different and are dealt with very differently than out in the field.
Sure.
But I mean, the genetic, like lettuce is lettuce at the end of the day, and so there are similar pathogens. We have there's one, I can't remember what it's called. The way they do it in the field is they actually flood the whole field and just let it sit flooded
Mm.
for like a day or two, and that kills all of it.
Hmm.
It's weird for us because we're hydroponic, so like everything's underwater already,
Right.
and the thing still lives. So like you do get weirdness there where it's like, well, it should not be alive. Like I don't understand. Like what so the way you deal with it in the greenhouse is very different. But we get to run everything through like massive UV exposure to like kill all the biological matter. And kinds of so we have different ways to do it. But yes, we do deal with pathogens.
Hmm.
But no
Yeah.
no human hands touch it.
What would fluctuate your lettuce price?
Like I said, it's pretty so there's two pieces to it. One is so we're in the space. So I work for Little Leaf Farms. Like it's a premium lettuce brand. It's not organic, so it doesn't sit in that, I don't know, $8 to $10 for however many ounces bucket or pounds. We're like a premium version of your conventional, so not organic, but also literally no human hands touch the product.
Hmm.
So it gets seeded automatically. It goes into the greenhouse, goes through basically like a conveyor belt, really, is what it. Think about it. Robots take it off, and everything, and do it. The last thing that happens is somebody with gloves on takes a lid and puts it on the container.
Hmm.
So we sit in this value place because the product's a premium product. Our lettuce is actually better. Uh, we get like many phone calls per week from customers calling to tell us how good the lettuce is, which blows my mind.
That's awesome.
I couldn't imagine a world where I would pick up a phone and call anybody and say, "Oh, your produce is amazing." But like,
Do you ever say like, are you sure it's not the ranch dressing?
right? I mean, that's my view, but like, uh, so yeah, so it is genuinely a premium lettuce product. So if you're into vegetables, into lettuce, like Little Leaf is really good, and so it's that. I mean, it's that classic. It's a value. It's priced for it where customers value it, not just cost.
Right.
Yeah.
But so once we understand where that is, then it's going in and the price fluctuates. So I don't know if you heard, energy prices are higher right now.
Yeah.
Even before bombing Iran, like things were higher already. And so we were getting higher fuel charges on our logistics and all that kind of stuff. It was driving up PET prices. So there's a lot of the fundamental stuff. And so you can't change the price week to week. Like I said, it's a multi-month process. So we absorb a lot of that volatility in that, and then every once in a while, which is to say, I don't, it's been like a long time since we've gone out and talked to customers about price. We'll have that conversation, but that's what it does. So they'll want to know, well, well, we made these improvements to our production line. We've got these deals with these logistics folks, that kind of thing. But at the end of the day, the consumer will pay what it pays, and like either the product's moving off the shelf, it's not, and if we're not giving that retailer a good product that's moving through the store. And what's nice is with the Little Leaf stuff, when people are excited to buy that, they buy stuff around the lettuce too, so it drives other stuff through the store. Like you got to figure out what that balance is that works for everybody. But it's a far softer thing, I think, than just a straight commodity.
So you guys are absorbing a lot of that price increase, let's say over the past like 60 days or something like that. We've seen
absolutely. So short term,
you guys are absorbing that, and then potentially, how long would it take you to go out to that retailer to say, hey, our fuel costs are going up. We're getting surcharged. We're getting, our containers are more expensive. What's that timeline look like for you guys?
I don't have a good algorithm for that. I mean, to your point, like over the short term, we're going to absorb any of that price move. Now, on the flip side, if for suddenly something got cheaper, we get that benefit too. But most of the time, as we all know, it gets more expensive, not cheaper. But we absorb all that volatility of the short term. I mean, in a world where it feels like there's a fundamental dislocation of markets. So let's say, actually, we were talking about '07, right? Like there was a big change in HTA pricing back then. There was no value effectively put on the working capital exposure somebody had. And then there was this big shift that kind of everybody understood on the other side. So I think, that kind of fundamental new normal world, I would expect us to probably be quicker about having a discussion with customers on price at that point, because it's a publicly known, really clear thing. There's a lot of patience, if you can afford it, with whatever 2 months of fuel surcharges or something. Like you're expected to kind of suck it up and eat it on the supplier side. But yeah, I think so. It's one of those things where I don't know at what point it looks. Basically, when it looks like it's going to be a normal thing, or I suppose if it was a really acute surcharge, okay, we're suddenly paying 2-3x fuel prices or something on our logistics. That might lead to a conversation about some of these other things, but it moves a lot slower. Happily, largely not my problem. I mean, I'm here to help, but like sales guys are on top of it. Operations folks are on top of it. If they listen to this, they'll probably go, Gabe doesn't know anything about what he's talking about. Like, let me fix all of it. I still spend a lot of time going, look, I don't know anything, but here's what I think. But I've been here about 6 or 7 months now, and so that excuse is kind of old.
You get a year. You get a year for sure. Yeah. You got to see a cycle. What's a cycle for you guys? Like a growing season, 30 days.
I was gonna say it's sub 30 days, man. We grow millions of plants a day. Like we harvest millions of plants a day.
Really? I gotta see it sometime.
Yeah, it really is incredible. Like we're building out of just outside of Nashville. Our third location's getting put up, 20 acres under glass.
Okay.
If you can imagine that, 20 acres all under one glass roof.
Yeah, that's crazy.
So your cycle from planting to harvest is 30 days?
Sub 30 days.
Sub 30 days. Okay, that's impressive.
Some of the crops get a lot closer to 20. Yeah.
Yeah, I mean, lettuce will grow in a garden in 30 days, and you guys, I assume, are pumping 24 hours worth of light on it, right? Do you have to pause the light?
Yeah, you do rest. In general. You want to give the plant, I'm not going to start talking about specifics because I feel like the grow team would come out and cut my Achilles. But yes, you do. Most places will give the plant a dark window to, I forget. I'm not a plant.
Sleep. You can just say sleep.
Yeah, sleep.
It's like
sleep,
plant sleep.
It goes through whatever, reduces it. Well, it is like sleep, right? It stress level goes down from all the growing, takes a breath, and then comes back at it. Yeah, we're running. It is a greenhouse, so we got the sunlight and we got the indoor lights cranking all the time, most of the time. But it is somewhere between 12 to 18 times as productive. Each whatever square meter is is that much more productive than on the open ground versus row crop lettuce. So yeah, it works, and we're also super efficient with water. So it's hydro, but we recycle all that. So a bunch of water goes into the plant, so the plant's holding a bunch. But I forget the numbers, but north of 90+% gets recycled. Basically, comes back through, gets turned into drinking water, and then goes back through other processing.
Is there fish involved in that process, Gabe?
Not today. We're always looking to do stuff. So here's something that happens. I don't think I talked to you. Did I talk to you after I went to Amsterdam and Berlin?
Yeah, not on the podcast, I don't think, but we
Okay.
talked. Yeah.
So I was super. So about 6 weeks ago, went to the world's largest produce show called Fruit Logistica in Berlin. Um, but
I did
ahead
not
of
hear
that,
this part.
so
Yeah.
so so the greenhouse industry, like the heart of it, is actually the Western Netherlands, the Westlands, they call it. So flew to Amsterdam, went out there, saw a bunch of greenhouses, which was great for somebody that had like zero exposure except for our greenhouse. And so funny thing is, Little Leaf, like they talk about, like, hey, we run like a really like intense greenhouse. It's like an
Yeah.
F1 race car, right? So like small adjustments make big changes. Things can go bad real fast if you're not on top, like all it. And I was like, okay, you know, I got there, saw like all these other greenhouses. Like turns out, like they were not talking smack. Like it
Like
absolutely,
it's not even close.
it's not even close. Like other people seem to recognize that, like the way Little Leaf does it, it really is like cutting edge.
Hmm.
It is. We are running F1 cars, and everyone else is doing stock. Kind of thing.
And is it, did you guys bring like agile to lettuce? Is that the deal?
You talk about the software development process?
Yeah, I guess. I mean, yeah.
No, we don't at this point. So I do run our engineering work runs largely in an agile framework, but in terms of how they do stuff on the lettuce side, I mean that's probably too long between things. Like those guys, the growers are in the greenhouse like every day, like walking the
Yeah.
crop every day, and like they're changing shit all the time. There's no, and so they don't really have projects per se. Like there's an R&D team, they do projects, and those are
Yeah.
longer scale things. But the growers are in the middle of it all the time.
I mean, it sounds like agile to me. It's just not, they're not doing daily stand-ups and like
They're not
the
well, but
ceremonies.
they're doing like no, they're not. But if you talk about saying like they're probably, I mean, it is from a engagement perspective across the team. I would say it's more like a trading desk than it is like software engineering, right? Because
Hmm.
they're all talking to each other so much about what are you seeing there? Okay, what's this problem? Like it's a like that set of people like they are the core to the business working, right? That grower focus, the like grower first mentality, grower first production ag mentality is actually what's differentiated the company
Hmm.
from most of the other greenhouse or vertical farm folks out there. Most of those other groups have not been what I would call production ag focused. They were all tech focused. Like it was tech bro dropping in, going, some we've all seen, like, oh, I know I can do this farming better than these
Yeah,
guys,
right. Right.
right? And the folks at Little Leaf that started it and are still there, right? Still very much like no. Turns
Hmm.
out you got to be a farmer first and figure out how to farm right, and then we can start to do this other stuff. So
Yeah.
like row crop guys, they're using really high tech hardware out there, right? Like the cutting edge tools and stuff. But where we struggle and where we're starting to bring stuff in is the software side of it, right? Or the data science side of it. They're around it all the time and they engage with large data sets, but they're just not set up in a way to let these people really dive in or leverage their expertise. And so that's my job in most ways, is like servicing data in usable ways, um, helping, partnering with them to help them make decisions in faster decisions, more
Hmm.
accurate decisions, so more precision management at the end of the day.
Yeah, right.
That's a lot of lettuce talk.
That
I
was
much rather hear like what I know about all that stuff now. Like Matt,
It's
what is
interesting.
what's the new thing? If I came to work for you today, what do you think I would think is different, having been out of Cargill now for 11 years, 10 years, something like that? Like if I came to work for you, what would be surprising to me, you think?
Oh man, trying to think of what all's changed. I don't know if there's a ton changed. I mean, what we were doing at Cargill was I felt like maybe cut of the kind of cutting edge of stuff, to begin with, and nobody was doing it. And it feels like more and more people are getting into the OTC type books and the managed bushel programs, and I think that's become a more prevalent and opening up more opportunities for guys to do more farmers, right, to do more business with other people, So I think there's a lot. Feels like there's a lot more companies out there. Seems like I don't know if it's maybe because I'm in the industry or what, but we've gotten bombarded by OTC people. I think within the past like 2 years, just like, hey, we have
You
an
say
OTC.
bombarded. What does that mean?
Man, it just seems like there's a lot of OTC platforms out there that are wanting your business, that are wanting you to kind of partner with them on OTC type products or stuff like that from a co-op standpoint.
Is that 3 groups? Is that 10 groups? Is it 100 groups?
Man, I would call it a half a dozen.
Okay.
At least half a dozen. Yeah.
At least half a dozen, like quality, of a certain level, like you could do business with them.
Yes. And I mean, even some people that you don't, you've never heard of, that'll come up and go, hey, we have an OTC type of desk also. And, we're looking to get into this. But yeah, I would say half a dozen different types of groups, like really kind of pushing and approaching and trying to see, what you have to offer or what they have to offer, trying to get you to look at what they have to offer.
So then does that change the way that you approach like figuring out solutions for your farmer customers?
I think there, in the Cargill world, they kind of limited it down for you. And I don't know if should I be saying Cargill world all the time?
Sure. Yeah, you're good, man.
So, sure.
Unless you signed an NDA on your way out.
Yeah, they limited down that portfolio for you and stuff. Yeah. So when you got out of like Cargill, I guess it opened your eyes to how much different things were available. And it seems like, there's just a big array, there's a lot of different things to look at in that perspective, that I guess maybe I was a little bit naive on how much there was actually out there and how much different things were available in the country.
Yeah, we spent a lot of time. Well, I mean, Rodney, you got to stop me if I've told this story on the podcast before. Did we ever talk about where MBE Plus came from?
No, I don't think so.
Oh, this is a given
NBE
how we started.
Plus.
NBE
so this
Plus.
Are you gonna let me try to describe it.
Yeah.
It was I locked in a minimum price that included my hedge fee, like it was essentially free. And then if the market all right, let me finish. You can correct me. And then if the market closed above that price, I'd get like a kicker, but that kicker was only like 5 or 10 cents.
It was
like
the
in
cost
my head, it just covered
the cost of your HTA fee.
So let me give the environmental context. That's really important. So we had this thing where, like we just talked about, right? 07, basically you could hedge out 3 or 4 years and not pay anything. You'd pay 2-3 cents.
Yeah,
I think that was the expense. It was 3 cents or something. Market blows higher. Every grain company is paying through the nose to cover margin costs. All the banks are pissed about it. Okay. So get to the other side of that. Now HTA fees were like, I think it was roughly about a penny a month. Like every month out you wanted to hedge, it would go up another penny.
Yeah.
And that was pretty much what everybody was doing. Like somewhere around there, nobody knew really how to price it. And so we were sitting there going like, we're doing some, and so I actually went out to the field and I spent about a week. It was actually with Nate Roberts, who's also been on the podcast. We were going around and I was just talking to folks, like trying to see, just, hearing what's going on, what were they upset about. And so when I was talking to everybody, they were pissed. So they understood why the HTA fees were up. So everybody's kind of cranky about it, but like they got it. Like it actually was fine. But so they understood that Cargill's working capital expenses got real big if the market went up. Like, fine, yeah, but like the market's coming off now. You guys are still charging me these huge HTA fees, and I know you're getting that margin coming in, and you're getting interest on that money. So what the hell?
Yeah.
So now what that would tell you when you hear that is, oh, I need to give them that kicker if the market goes down, because they understood why they were paying it if it went up. But the original product that we rolled out was you get paid back if the market comes off. Nobody did it.
Nobody did it. So you like rolled this product out?
Oh, we rolled it out. Yeah.
I mean, we would have been there. Me and Matt would have been there when we did this, right?
Yeah. It totally fell on its face, right? So and it was exactly what they asked for, right? Like
it's like an NBE wine. Like
we
NBE
probably,
complain?
I think we rolled it out using Market Maker as a prototype because it was, I won't go through it. It was the same
Okay,
structure, right? So,
sure.
so there was the regular Cargill HTA fee. Let's say it was 8 cents. We would do NBE plus and charge you 9. But the original version was if the market went down up to 9 cents, you'd get your feedback. So it was down more than 9 cents, you get all 9 cents back, and anything else, you'd get it back. So basically, you wouldn't get charged for your HTA.
Yeah.
Turned out they were just complaining to complain because if you hedge, right, you set your futures level, and the market goes down, you're happy. You're a happy dude. You're like, all right, I'm a genius. I sold that.
Yeah.
I set that price. I don't care. Like I'm great. They were even though they understood why it was higher cost when the market went up, they didn't like it, and it got even more cranky because when the market I paid 9 cents for an HTA and the market went up. This sucks. like
Yeah.
and so we so on the behavioral finance side, when I teach like behavioral finance stuff, I call it a happiness hedge. So we flipped it around so that when the market went higher, you got up to your full feedback. So you were okay paying the fee because you knew either you were going to be a special guy who was a genius at hedging because the market went down and you didn't care that you paid to do it, or if you were pissed because the market went higher, at least you didn't pay anything to do it. And
Hmm.
so, sorry, just talk. So that's one example that I think is pretty easy to understand. That was driven by market context, but we were doing that all the time. So like, if you ever got a call from me and got asked like weird questions that you were like, "Why is Gabe asking me this stuff?" It's because we were working on something and trying to figure out like. So I've heard. So what would happen is I'd hear somebody would come up with an idea, generally one of you guys, like somebody out in the field would go, "Oh, hey, can we do something like this?" You hear from one person, like if I'm excited about it, that's nice, but it doesn't really matter. And then you start to hear like 2 or 3 people will call you about it, whether or not they're all talking or whatever, you get different versions of it. And then eventually you get to a point where like 5, 7 folks, and you're like, all right, maybe there's something here. So then you start to put it together and see if there's
Hmm.
interest. Uh, Most of that stuff we kill because, to your point, Matt, it can get real confusing really fast. Like you can be as complicated and clever as you want. I think people often confuse complexity for value, right? Like
Yeah.
they conflate those two things. So we actually worked really hard at keeping the portfolio focused and really on whatever the core needs were. And so those slow evolutions over time were driven by what customers saw as problems as opposed to us making up shit and throwing it at the wall. I mean, we'd always get asked for more complicated things. And they, again, people just, they'll ask for everything because that's what they think they want everything. But it turns
Yeah.
out we like 7 things on the menu. We don't, we actually like one thing on the menu.
Yeah.
There's only a
Right.
couple different things that actually, yeah, that make up, 85% of what you're doing.
That's right. It freezes your decision making. It makes,
Right.
yeah. So
And hey, Gabe, I would say that has changed. Like most of these companies are using a pretty much a shotgun approach. Like I can get a quote for any little thing I want at most companies, right, Matt? You can do the same. You can, even if you're only pitching a few structured products, if I called you up and was like, "Hey, you got anything that does this?" You would be like, "I don't have a name for it, but we can get it
Yeah, I
done."
mean, there's a lot
Yeah.
of different things that we
Yeah.
could do, right? So depending on what a guy's, if you have I would say the farmer's more in tune of it,
Yeah.
now because there's more people out talking about it. And so there are specific things that maybe a farmer is looking at that he's heard from somebody else or, stuff like that. And I would say even as like a grain guy, if you're talking to a farmer, right, there's a lot of questions to be asked of that farmer of what maybe he's getting pitched somewhere else to know if that's like, a good thing or a bad thing too.
my favorite was every once in a while we'd get a call and somebody go, "Oh man, somebody's got whatever this thing that we have, but it's priced like 5 cents better."
Yeah.
And like I'll go look at it and be like, "Man, that's a stupid price. Hey, can you see how much we can do?" Like,
Yeah.
guess what? Goes away immediately. Like it would disappear every
Yeah.
time. Um,
Yeah.
so Matt, like you said, okay, so let's call it a half dozen reputable vendors out
Yep.
there. Do you look at them basically as commodities as in terms of their services, or are you like these are the people we go to for this, these are the people who go to this? What differentiates them like from your seat?
I think the level of service, the relative ease to like, obviously their system is not hooked up with our system, because, their system is different. But the ease of getting their information to our system, the ease of maybe statements and back end work are super important on our side of being able to match the customer contract up with the contract we're doing with that whoever that different company is. And then, what kind of product, what their capabilities are, from an offering standpoint. And they're again, everybody has their own little system, right?
Mm-hmm.
Some systems are better than others, is what I would say, and the ease of execution and stuff like that.
So most important thing to you is how easily it ties into your back end, and then second is how quickly
I
can
would
I
say
execute.
I would say that's a big factor. I would say that's a large factor. Like if it doesn't tie into your back end, if it's not easy to tie into your back end, it's just not going to work,
Yeah.
right? It has to be able to tie in to your back end. You can book a lot of different structures with somebody if you want to, but if it doesn't tie, if we can't figure out an easy way to tie it into our system,
Something's going to go
it's
wrong.
yeah, something's going to go wrong, right? So I would say that's a very important thing when we look at different things, of like how we manage that.
There also, you can feel it on the farmer side, Gabe, when you call these folks. There is some commoditization to it because you'll be like, "Hey, what's an accumulator quote?" Blah blah blah, and they'll give you one, and then they'll be like, "Oh wait, let me check this other system," right? And they give some like slightly different quote. They're never super far off, but we see it. I've seen a little bit of that. Matt, you guys are working with a couple, right?
We're working with a couple different companies, and you'll see quotes that vary, 2 to 5 cents,
Mhm.
for the most part versus different structures. So same structure, type of deal and vary 2 to 5 cents depending on who has what where.
Yeah, right.
That actually reminds me, if super random non sequitur, but like that price difference, I think the floor actually shut down 2 years ago, like the CBOT floor, and like that was always a thing where somebody was looking at even back in 2008, somebody's looking at floor quotes versus screen quotes.
Oh, right. Yeah,
Because the
Yeah.
floor would tick, once every 5 minutes or something, and the screens go like this. So you run into that there. That's not anybody's excuse now, but that those small tweaks, yeah, that's funny.
Is the floor still open for options,
No,
or
I
is it
think the whole
completely
thing's
closed?
shut.
It's
Yeah,
completely closed.
I think so.
Hmm.
Oh, man.
But yeah, no, I think, like you said, that there's a lot, the big hot topics seem to be the accumulator type products, right? That's what everybody's kind of gets used to. I think most of the companies are shooting some sort of an accumulator out there or premium offer type of product or something like that. And the verbiage is pretty easy. If you're getting a call and say, "Hey, what's your accumulator look like?" There's a couple questions you ask to match it up and
To narrow it in, yeah.
yeah, to
There's
narrow it up and yeah.
so accumulators use what we call barrier options, right? So basically barrier meaning when it hits a barrier, the thing knocks out.
Yep.
Um, there's a barrier option called a Parisian option, uh, which is so this was something this is an example of a product put together. So like I think I got excited about the product name before we actually so we called it the triple play because the way it would work is the market would have to close below the barrier 3 times for it to knock out. So it wouldn't knock out right away. Market so there's 2 reasons we didn't do it. One is it was too complicated to explain. Like we couldn't come up with a good way to convey it. And because it was too complicated to explain, it wasn't worth the effort. It's from a processing perspective, it is a CPU heavy model. Like
Mm.
it's a super complicated, like actual processing model. So like I'd price it up and hit run, like could walk away from my desk for 5 minutes before
Ooh.
come back with a value. But that was yeah. So as you're saying, Matt, whatever you come up with, there's a model for it. But there's some Parisians, which I've never had a chance to use one, but that was
That is interesting. I have
So
not seen one of those.
Gabe, if I wanted to buy a Parisian put, is that what it is?
I
Like
mean, sure,
essentially.
you could buy a
Yeah.
Parisian put. Yeah.
Yeah. Where would I shop for that? Like who's
I
the
don't
guy I
know
call
who
for
you would
that?
go to. I bet so, man, we'd be getting really into the weeds on this stuff. So one of the advantages Cargill had back in the day in the way it worked is we had what were called closed form derivative models. So we had a couple of real smart guys that built these models that were closed form. So, when I used to teach option schools, we used to talk about like A plus B equals C. And so the idea is if you know volatility or market price, option price, you can figure out volatility, right? Or vice versa. That's not
Mhm.
really the way the options work. So it's calculus. So you can't actually do that. You can't back into it. But so that's called an open form model. So you can't like get down to a single variable and know the answer. And so most option modeling at the time used what's called open form methodology. So they'd have to do like simulations to figure out what the price is. So they do Monte Carlo and whatever. I don't know if somebody's got a closed form Parisian out there. Like that would really be what you're looking for. I mean, I guess you could run it through Monte Carlo too. That would get you a price, but I don't know. I don't know how these guys are doing stuff. I'll also tell you the people that actually have the Parisian ready to go probably terrible at figuring out what the right thing is for you. Like,
Yeah. Right.
Yeah,
Yeah.
right.
Yeah.
um, but
So
like
I'll
that
tell you.
conversation should start with you. Sure, that's what you want.
Yeah, exactly. But I'll tell you the reason I ask is one of the things that I've seen change, Gabe, is 10 years ago, 20 years ago. It's so long ago. Things like the premium offer were called the free money contract, right? You would get very nervous when people said stuff like that. We were trained not to say that stuff,
I
but the
got anxious
farmer,
just now.
like, hey,
Yeah,
yeah,
yeah.
exactly. Ring that bell, give me that free
It's
money.
like free money.
Yeah. And then if an offer got picked up, which it never did, right? Hardly ever did, they were
It was
like,
never going to get picked up either. Yeah,
yeah, they were so annoyed, right? It was
yeah,
like, oh God, that was terrible. So one thing that I think has changed is like this year in soybeans right now, one of the problems I have is a lot of guys have new crop soybean accumulators on. Matt, I'm sure you're in the same position.
Yep.
So, when we put them on, beans were like 1080, let's say, and we're locking in 1140 premiums on an accumulator with like a $10 knockout.
yeah. Okay.
Okay. And our tune has changed with farmers, which is like, I won't let you sign this contract unless you say, I want 1140 beans, right? Like, I want double at 1140. I say that all the time. And
Yep.
they're like, yeah, yeah, yeah. So now we're to the point where beans are up at that level, right? Everyone's excited. So that's what's changed is everyone's excited. We like that. But now we're smart enough to know actually the risk is that we drop down to $10 and this $1.40 evaporates. So what I've been trying to figure out is how do I go, take the other side of that knock, right? So long story short, if I sold a put on the downside, pulled in a premium, and we rallied $2, right? My first move is going to be like, hey, how can I buy back that put, right? To eliminate that risk because
Right.
it's cheaper.
Well, so that you know how to do though.
I know how to do that. What I
You know how
can't
to do.
figure out is the math to do it on an accumulator that's a third of the way through the pricing. If we get down to $10, I actually, need
Right. So I
1080 or
assume
whatever.
every day that goes by, you're pricing bushels at 1140 or
Exactly.
whatever.
Yeah.
Yep.
Okay. And if it knocks out, everything that's unpriced goes away.
For sure. So your
Correct.
fear is that you get to the middle of, you know, June or July and we have a large old crop carry out all of a sudden, right?
Yeah.
Because we didn't ship 8 million metric more tons to China and you go down all the way to $10 and you only got 50% of your bushels sold and you thought you had double the amount of bushels sold
Yeah.
right now today, right? So you really only have 25% of the bushels sold that you thought you had to begin with.
So where was the market when they locked these things in? 11,
Like
1080.
1080 was
1080?
pretty popular.
Yeah, call it.
So, I mean, so if it were me, right, what I'd probably look at is like I don't know, maybe a 1080, $10, 1080, 980 put spread. Because if you got people in that long-term mindset, like you do the put spread because you're that way you're netting out some of the volatility pricing, right? Because they
Mm.
they both have buy. In fact, the lower strike is going to have a higher vol on it, so that's nice. If the person's comfortable sitting on a position till expiration, like that's when a spread like that works for you.
Yeah.
And that way, if you do go down, right, like, so you're not going to get back to 1140, but you got 1180. I'm picking 980 kind of arbitrarily. Dollar generally works in people's heads and beans, right?
Sure.
50 cents in corn are the increments we kind of think about. But that's probably what I do. And then, and obviously you do it at a point so doing it now is a great time to do it because you're almost a dollar out of the money. So the whole thing's
Right.
probably pretty cheap, relatively speaking. And you're only going to do it on half the bushels or whatever you did in it. If you want to be really disciplined about it, what you would do is unwind that position. You look at it once a month and, whatever. Let's pretend you need to buy 10 contracts to hedge out 50,000 beans or something. You'd pull in a contract or two every month. So you're not holding that position any longer than you need to.
Yeah, exactly. You would unwind the new put spread as things get priced out.
As things get priced.
Yeah.
Like that would be a super disciplined way to approach it. I don't know if that's right. I mean, and then the other thing, but if I was being really quanty about it, what I would look at is like, okay, how much do we think we can move in the next month? And I'd probably, if that wasn't going to knock me out, I probably wouldn't buy that first month's of coverage.
Yeah, that's a good idea.
And then, right. So you can start to do things like that to cheapen it up, but that's how I would approach it. I'm just the guy from Manuka, though, so I don't know.
I love it. Just to give people an idea, so I'm looking at Nove beans. Nove's trading 1150 on the close.
We should say Rodney's not giving any trading advice right now.
Not giving trading advice. But if a guy wanted to do something like that, Nove beans at 1150. Looks like the last price for like a 1080 put was 26 and a quarter. You could sell a 980 for 5.5. At some point, it's like not even worth selling that put option, but whatever. But to your point,
more than I need.
The trick is you want to take that out to expiration. Otherwise, you're going to be fighting that short put in the case where you go down. Yeah, exactly.
Yeah.
When does we had the crop insurance fella on? That was that Jan 30th, right? Where do those price levels kick in? Where's that put active from?
Yeah. We ended up 1093, I think, on beans, and
shit, well, I wouldn't do anything then. What are you even talking to me about this?
Gabe, come on. And I think like 460 on corn.
If anything, I'm not even buying the top side. I'm just selling the 980 put. Let me get that.
So once again, not giving trading advice on this podcast, right? I think it's a good time to say that. Gabe says take no profit. Crop insurance as you covered. Yeah, exactly.
Yeah.
I just looked that up. It looks like 1109 on beans and 462 on corn.
1109. Yeah.
So in all seriousness, I would take that into account as well when you're looking at how much to cover. Rodney, I know you and Matt, I would assume you're doing the same. You're looking at the whole portfolio there and what's actually covered by that free put. And I wouldn't cover that shit either.
Yeah.
Right. With the same, I mean, it's price insurance, right? Like price insurance doesn't get you ahead, it keeps you whole. And so you don't want to overpay for coverage you don't need. Like that's it.
Right.
But yeah. So
the crazy thing on the soybean side of things is, it's really like 85% of 462 ends up being like $4. You're like, hey, I got some kind of $4 or whatever. 85% of 1109 is like 950. It's like so low. We just ran that math the other day for a guy, and I was like, oh, I had to punch that in wrong. And it's like, no, actually, it was right. Matt's double checking my math here right now.
I am. I'm
Good.
just that is 942.
Yeah.
Right?
That's 85%.
Yeah. Which is
that's garbage coverage. Yeah.
But all the more reason to do the spread, right? Because you don't need the coverage at that level then, right? You
right.
Don't want to keep
starts to kick in.
Yeah.
Oh, well, man, I didn't call you. This is a hot topic for me on like Monday, Gabe. I didn't call you because I wanted to kind of touch base on the podcast about it. So
all right.
We're
Well,
bad
I
at
hope you didn't
pretending
make
we didn't have a
I guess the
conversation.
market's up today, right? So you didn't miss anything. Got cheaper for you.
No, exactly. Yeah, Matt. So the last couple weeks or couple months, I guess, have been, I'd say, more fun. It's been more fun for me. There's like a fun little story to tell. The only annoying thing that I've had is we're kind of placing offers that make sense, rewarding this market as we rally. And those like weeks when you tick off 30% of your corn crop in a week, and you're like, ah, I never got a chance to feel good about a single sale that I put on. You know what I
I,
mean? Did you
yeah, I
feel that?
know, but look at it like charts though, and like look at where those highs come in, and those like highs come in like short little time frames though, you know. So
Yeah.
if you're not doing that and stair stepping those up, the last couple of years, the last 24 months, you know, since the summer of 23, you know, you probably didn't get that much picked up. If you were a slow seller, you didn't get anything done. You
Yeah.
know, I remember coming off of that 23 year, and man, it was a drag because the market, you know, you just went through the COVID and the Russia Ukraine like kind of run up, you know.
Yeah.
So you had like, man, it just kept going up and up and up, and then the volatility was really high, you know, and you're like, well, I just want to kind of slow play sales. You were a 5% seller then, you know.
Yeah. Right.
And then if you were a 5% seller from the summer of 23 till now, you didn't ever have anything done. You're sitting with 30-40% of your crop in August at $3.80. Yeah, and so, you know, I think those are good things though. I think those are good things where you go, hey, this market just moved a lot, and the customer is maybe a little disappointed. I bet you there was a dozen guys go, I got all of those offers picked up
Oh, dude.
already.
I mean, but I would say most were like happy that they got them picked up, but it's just
Yes,
like this
yes.
kind of annoyance. Yeah.
But
Yeah.
yeah, it's like, man, do you think we ought to be slowing down? It seems like those got
Exactly.
picked up really, really fast. But if you look at the past 24 months, you know, that those windows have been really small. You know, you should have been pricing the middle of January till the middle of February a year ago. And you wish you would have had all your offers getting picked up, right? You
Yeah,
probably didn't
exactly.
do enough during that time frame.
For sure.
Is there a reason you're not using like a trailing stop to step those in? Like once you get to the level you're looking for, so that because then you're always selling when it's going down, man. Like you're
Yeah,
Yeah.
I like trailing stops. I would think the psychology of the farmer is that like he's going to go ahead, he's going to watch it close enough to manage that though, you know. So it's hard to get guys talked into utilizing a trailing stop, you
Do
know.
you
That
guys offer a
might,
trailing stop on a hedge drive, Matt?
yeah, like a trailing
You do.
stop on a heads to arrive, right? Like I think that's hard to do, right? So I mean, if you got today,
so
we're
Matt, you got to package that up in some marketing. I think you'd have a real product there if you put some marketing around it. I'm dead serious. Like I I think it's so much better than paying somebody to manage. Like if you know what levels you're looking for, you've got your plan, and you're somebody that like gets annoyed when you get taken out on 30% of your offers because it feels like the market's going up. I feel like that trailing stop is a great alternative. I but I hear you. It is another level.
I wouldn't disagree with you. I wouldn't disagree with this. So I mean, but like the psychology of the farmer, you're like 494 today on D's corn, right? I
Yep.
think most guys are saying their break evens are, you know, somewhere between 460 and 470, four, you know, 450 to 470, somewhere in that ballpark. So you're like, okay, well, why don't we put a trailing stop in at 470, right? And you know, there's the fear of missing out of it going to 510 and thinking that you were going to pull the trigger at 510, which was the high of the market, you know,
Man,
Yeah.
so
with that
so
in there.
here's what
So,
I'm missing, right?
so
Like
two things. One, Matt, I think you're talking about a stop loss
Yeah.
order,
Okay. Yeah. Yeah.
which is
Yeah.
different
Correct.
than a
Correct.
trailing
Correct. A
stop.
stop loss.
Yeah,
Yeah.
right.
Yeah.
Yeah,
Stop loss in that scenario. Right. Yes.
yeah.
Yeah.
But can you do a trailing stop on a hedge drive if I want? Like, could I give you an order that says, "Hey, I want to sell
I
five
could
cents less
probably
than the
figure
high"?
out. Yeah, I could probably figure out a way to do that. Yeah, but
It's tough
I'd
though.
have to.
Yeah.
I'd have to look in. I have not done the trailing stop. Yes.
I think we had that at Cargill, didn't we? Didn't we
Oh,
look
yeah.
up do trailers?
We
Yeah.
did,
Okay.
yeah. I remember using a trailing stop in a few different occasions.
Well, I mean, I'll just tell you, like that what you just told me, right? Like we're
Yep.
at, call it 495, break evens 470, 460, 470. Like I'm having a conversation with somebody about, let's put in a 20-cent trailer. If the market drops, we'll get triggered when we get to about 475. If it
Yep.
just drops straight from here, like we're okay, right? And if it keeps going up and it hits 510 and you want to sell 510, great. Sell 510, kill the stop, you're good to go. By the way, you're not going to want to sell at 510 when we get to 510. We both know that.
Yep.
We got the trailer in.
That's what
So when
happened.
you're sitting there rooting for it to go to 515, we know we're not going to miss 490. Like that's the conversation that I really like
Yeah.
about a trailer. Is it's like it's kind of like put your money where your mouth is. And again, it when you have it in, it's like it is a plan. It's a plan that automatically executes and takes all the emotion out, right? If you're disciplined about not killing it because you think it's going to go higher. Like if you think it's going to go higher, leave the stupid thing in. That's the bet, right?
Yep.
That's the bet. But anyway,
Yeah.
like I said,
It's
I
funny you
feel
say
like
that, Gabe. I literally just pitched that to a guy yesterday, a farmer. I was like, hey, what do this is like a thing. I frankly don't even know where I can do it. So it's not an off-the-shelf thing. My trading platform might do it. It might not. I don't know if a grain company would like actually let me do it on a hedge drive.
I mean, if you're using like actual futures brokerage stuff, it
Yeah.
should be in there. Like that should totally be a thing in there.
So
I
that's
do it on
another
like
thing that
Charles
has
Schwab
changed.
or whatever. Like you're telling me,
I'll check. I'll report back, but I'm not
yeah,
100% sure I can run it. In
you need to
fact, I'm
change
almost
platforms. You
certain
need
I
to change
can.
platforms if they can't give that to you.
Every platform has their own niche. That's the problem.
On futures and options, that shit's pretty. The exchange traded stuff is pretty. Like I said, I can do Schwab. I can do it on
Yeah.
Schwab. You should be able to do it on whatever fancy thing you're using.
Yeah, but I'm telling you, so we don't need to get down this rabbit
Yeah.
hole, but a trailing stop is not a board of trade order.
It
It's
is.
an algorithm in a trading platform.
I would have to look. I don't remember the rules off the top of my head. I used to know them much better. I think so it depends what you're dealing with. So it depends how the order is entered ultimately. So a good platform will enter the trailing stop level as a stop order, which is an exchange order. That's an aggressor order. For those of you who are deep into your trading algos on exchange, aggressor order gets priority right behind market orders, existing market orders. So if a market order triggers your stop order, you're right behind that market order, and any other order is behind you to sell. And technically, all the stop orders that go in on the screen are actually stop limits. I don't know if you guys knew that. That was a fun lesson we learned one of those days at Cargill, where they
I
market
remember that day
open.
when we learned that lesson. Yeah, that was fun.
Default stop level, at least at that time, was like 5. The limit was like 5 cents, and we'd opened like 12 cents below or something. And yeah, it was a real shit show. But yeah, so a good platform will enter that in as a stop on the other side, and it just cancels and replaces as the market goes higher. The actual exchanges can handle millions of cancel replaces at a time anymore, so it's not like a thing. But most platform, well, again, on the retail side, I'm able to get it. So I don't know what you guys are using. I would expect it to be better than whatever I got.
I'll tell you what, I just looked. When we go looking for sponsors for the show, Gabe, when we get real big, there is one company that is not going to be willing to be our sponsor. I'm not going to tell you who that is, but it's my trade. I don't know. I'll check with them. Yeah. To be named later.
I just sent an email to one of our trading platforms and asked them if we could use a trailing stop in the platform.
Yeah.
So I'll find out for us. But yeah, it is something that's a great idea and that's a great tool to use. So I'm not sure if our platforms have that capability.
Yeah. Hey, we should be super clear for the farmers on the line here. How does a trailing stop work, Gabe?
So trailing stop, the way I always think about it is you set a absolute amount that you want to be different than the market right now. So in the example, we're talking about like 20 cents. And so when the moment you put it in, it'll tag itself 20 cents below wherever the current market is. And then if the market ever traded, so if it was traded at 495 right now, it gets set at 475. If the market ever trades above 495 before it trades 475, your stop order will move with that market. So it'll always stay 20 cents below whatever the highest price was that traded. Then most of the time at some point, the market will hit that and then we'll come back down, and stop you out and sell you out of the market. And so but it keeps that. And so you don't have to keep an eye on it. It automatically moves it up. But like I said, it's a great way to, if you think you're going to be disciplined about selling at 510 or, whatever the price is, it's a great way to make sure that as you're going up, you're putting something in there to take action. If it does come off hard and fast, you're not on top of it. And it's easy enough to cancel, because if you're at 510 and you're selling at 510, like that stop's going to be at 490. Like it's not like you're, threading a needle there. Like you got plenty of space. The other way some places do it is by percent. I feel like that's more, for me, that gets more confusing because it's going to widen out as the market gets higher.
Yeah.
And
equities, people think about equities in percents, right? But not so much like corn and beans.
Yeah, I mean, these days when I use trailing stop, it is on equities. Like I don't trade like the corn market. I'm not on top of it enough to want to do that. Unless Rodney calls and whispers like he's got some super deep insider information about what's happening in the Gulf.
This lettuce place I'm interested in.
Yeah.
And hey, to be clear, just to tie a bow on it, that when we go through that stop, in the case of a gap where we gap through it, you don't get filled at that stop price. Then
you're not. So
it's a market order.
You're not guaranteed to fill at your stop price. So man, we were talking about some really specific, but it's important stuff.
Yeah.
So all stop orders in the market on the board of trade are technically stop limits. And what that means is there's a stop level and a limit level. So what actually happens is your stop level triggers a limit order, but it's a special limit order, an aggressor order going into the market. The stop order makes it go to the front of the line. But you won't sell below that limit price. So again, we were talking super inside baseball. As like an actual professional trader, you can specify what you want that spread to be. I think the most you can do is, when we were there, it was basically whatever the daily limit was. Like so, and so the real risk you run is you've got that trailing stop, and the market literally opens below limit down, and so nothing trades at all.
Yeah.
The times that we saw over the 15 years I was at Cargill, where it traded limit down and like literally none of those stop orders got filled, was once, I think, maybe twice. Like in 3,000 or whatever 2,000 trading days. Yeah, it's a fairly infrequent event, and the market's open so much now. It not only does it take opening like that, like a gap in opening. That event that drives it lower has to be in those few hours that the market's closed. Otherwise,
here's another thing you did not have when you were in the grain business, Gabe.
Oh man, I can't wait.
Trump with True Social 24/7. So this is not a political statement, but man, market hours don't mean anything anymore. Like literally doesn't mean anything. Monday morning, I got up to go to CrossFit. I roll out of bed, check the corn futures, and we were like, I can't remember. I think we were up like 8. I was like, oh man, big day. Go work out, come back. We're down 8. It's 5:30 in the morning. Like nobody's done it.
Because all that 5:30 a.m. fundamental news coming out.
Yeah. And it was 2 tweets. One by Donald Trump and one by, some unnamed minister of defense at Iran. And that's what did it. So that's the reason I bring up, these limit orders.
Even in those situations when the market's opening, I'm not going to, so obviously I can't guarantee anything. We never had a situation where, other than a market opening gap lower, where a stop order didn't fill. It's not impossible. And if it's going to happen, it's going to be at 5 in the morning because the book's lighter than the order book. But that's another reason to have the order in. Now you're going to be annoyed because the market went up and down and whatever. Sure. But if you want to get back in, get back in. Like that's the other thing. Like you can.
Yeah.
So those are there's no perfect answer here, right? Like and I do really think Yeah. More than, 99.999% of the time, trailing stop is a solid approach that ultimately is fairly simple. That keeps you, it puts you in a place to hit what your goals are,
Yeah.
and stay out of your own way.
Matt, it feels like every farmer in the world gets a chance to work with you in my backyard, but I'm sure they don't. What advice do you have for farmers looking out to next year, or whatever in general related to grain contracting and pricing? I'm not
Yeah,
asking you to predict the market here.
everybody's different, right? So every farmer has a different level of risk tolerance. Everybody has a different level of what they want to have on, sell out of the field and what they can hold in the bins. And so I hate to have like basis off recommendations, until a customer and get to know his operation. But I would say, for guys, be sold here. We're at 22-month highs on corn. I don't think we've been this high on new crop corn since December of 23. I don't think.
Yeah, I think you're right.
Um,
Yeah.
and from a bean standpoint, we're sitting at the same 22, 24-month highs in the bean market that you haven't had an opportunity to sell. We've just went through, some spots where guys, it's been a struggle to make money. It's been a struggle to sell bushels above break evens, right? It's been so have what you need to priced, have a good outlook on what your plan is here. These prices aren't guaranteed, and I know it can go higher, but have a good ballpark of what you want to get done, and lock in
Yeah.
those levels and at a good base, and whether that's 30% or 50%, and maybe some guys it's more than that, but I think 30 to 50% on both corn and beans is a great spot to be for new crop corn, and locking those profitable levels in today.
Yeah. I agree. I think from a mental standpoint, I know it's tough for some guys to get that aggressive when frankly, the seed isn't even in the shed yet in a lot of cases, let alone in the ground. But yeah, I just keep reminding people you're going to plant, right? Like you're an Illinois farmer, you're going to plant where you're going to plant. Um, yeah, so trying to find those levels that you're comfortable with.
And I know you've said this before, but you're always long corn,
The
from a
rest of your
producer
life.
standpoint,
That's right.
you're always have corn basically bought on the board, essentially. It might be long in the bin, it might be long in the field, it might be long 2 years from now, but
Yeah.
you're going to have corn at some point in time to
Yeah.
sell, that you're going to have to sell.
Yeah. That's right.
You guys, when the market's doing something like this, and so Matt, I heard you say 30 to 50, which feels like a wide window. And I apologize if I missed this, if we've talked about this type of thing before, but something that occurred to me when you're saying it, it's like, man, Rodney, yeah, it feels like a big jump from 30 to 50. Like that's a big range. Would you ever look at selling 27 corn for that 20% buffer? To your point, you're always long, right, Matt? You're always
Yeah.
Yeah,
long. I'm growing
right.
corn in 27, like, and then I can always roll that back, right? Like if I want to
Yeah,
into a
correct.
20.
No,
Rodney's
I
making faces at me. He don't like that.
Well, dude, like there's a lot going on there. Go ahead, Matt. Yeah.
Yeah, no, there is a lot going on there, right? So, but I mean, I have even like here recently from an old crop perspective, right? You're at these levels where you feel like, oh, maybe I should be 100% sold, right? Maybe I should be out of my corn. If we see a big drop in the market, right, I should be out of corn. But if I don't want to get left out on some run up either. So I've even thrown out the ideas where you're 30% sold on new crop corn, and let's say you're 80% sold on old crop corn, and you're like, well, like where I don't know if I want to sell more old crop. I'm not sure exactly what I have in the bin, right? Maybe there's a run up that I can have later. And it's like, well, why don't we look at like maybe doing something where, we sell an extra, 10% of new crop, and then if it will hold on to the old crop, a little bit longer. And if the price keeps going up, you can sell some more old crop instead of making more new crop sales. Or, you can do 10% in new crop or 10% in 27, whatever it is. But like Gabe said, you're always long corn. You don't have to be 100% in old crop done before you start on the 26 or before you get to a certain spot on the 26 crop. And, come September 1st, everybody's bidding off that D's contract anyway, so you can clean out bends at the end of August or beginning of September. We just set some basis on some new crop sales and roll with it to your local ethanol plant.
Yeah. Yeah. And Gabe, so I've been looking hard at that 27 because immediately that's where my mind went. The thing I'll say, like tonight, D's 27 is a couple cents less than D's 26. So whatever, I'm going to have a, hedge drive fee is going to be twice as expensive out to 27. If this continues, my cost of production goes up to 27.
Plus, baby.
Yeah, I know. We do need the MV plus. But so what I've been telling guys is, hey, if you like these prices, just get a little more aggressive in D's 26. If there's a problem, then, I'd be more likely to see, hey, how do we roll this out to D's 27, if there's a production problem. Yeah. But the other thing I'll say is like, historically, if I'm 50% sold on April 1st, I'm 30% sold on October 1st, right? Like essentially these guys are outproducing the APH that they're,
I'm 50% on my APH. I'm not actually 50% on my actual production.
Yeah, and I think they're a little better about that. I have seen, people have tightened those up. Mostly I don't hear 200 bushel corn anymore. For the longest time they raised 200 bushel corn, but they actually raised 220. Yeah. And now, guys are coming at me saying, hey, 225, 230, 235. So that feels, closer.
Guys are typically underestimating their production probably by a good 5 to 15%.
There you go.
Typically, right? Yeah. To be on the safe side.
Yeah. Right.
Is that a reasonable volatility level for production expectations?
I would say, you're talking, I just ran the numbers. It was 225 versus 250 corn, right? And I'd say that's I would say that is 250. I mean, has been the norm the last 3 years for a lot of guys in my area. And then, but 225 was probably the norm. You're talking 5 to 10 years ago.
Well, I'm not even talking about like that increase. I'm saying year to year in terms of, so if you throw out APH, right, and somebody's like real ability, well, actually, if you just say, what was my production last year? What's the variance this year to last year? Like, what does that look like year over year? How useful is it using last year's production? Like, obviously, there's some slight trend up there, right? So maybe you start at like plus 2% or something, but then is it plus minus 7% off that? Is it 5%? Is it 20? Like, I don't know. Like that, I feel like that, again, this is me being like the trader. Like, how would I start to think about what that risk is? And like, because fair enough to be conservative, pushing that like that's super reasonable. Let's figure out what conservative actually means. Like, so when you're saying 220 and you're at 250, like, has that ever happened to you in the 15 years you've been farming? Yeah. If it has, okay, fine. Yep. But if not, like, dude.
Yeah, and I think you're looking at like insurance too, where that's a lagging number versus what you're producing. That number moves slowly up, but it's a lagging number of where your actual number is. So a lot of guys will use that APH or that insurance number or maybe an insurance number plus a little bit or something like that. But your percentage wise, to answer your question on a percentage wise, I'd say 5% is, a fair risk, right, of underproducing, what you did last year.
Yeah. Yeah. I'd also say because we haven't planted it yet, I have less confidence, right? Like if I'm planting corn on April 20th, it's not drowning out. I don't have a ton of replant. Like as we go, I get a little more confident in that number. So I get the conservative. What I was saying was not a shot at being conservative. Although what I do encourage guys to do is use the number that they're telling the banker, right? Like that's what it comes down to. You're building a budget. It like if you're coming in and saying, "Hey banker, I'm going to raise 190 bushel corn at 650," it's like, okay, I'll use that as your thing. But the reality is, they're probably going into the banker saying, "Hey, I'm going to raise 230 bushel corn at 460," and it's like, okay, let's start with those numbers because I think they're probably reasonable.
I would agree. I would agree with that. And wouldn't you say that number's probably a little bit off though, right?
It's
What
definitely
they're
off.
using?
Yeah, definitely.
Yeah.
Yeah,
Like that 230 number is going to be, somewhere in that 5 to 10% reduction on what their actual yield is.
yeah, I agree.
And that's the same
Yeah,
number they're using the banker.
that's
I
right.
would think for the most part.
Yeah, that's right. Yeah, cool. Well, I actually need to wrap this up. Gave any closing comments?
I mean, I feel like maybe I should start a derivative shop on the side where all we offer is trailing stops and a really smooth experience that easily integrate into Matt's grain marketing
I like that. I
contracting
like
system.
that. I like that idea. I haven't heard of the trailing stop in a while, so I do like that. So
We're going to skate to one song and one song only.
you can hit me up. Be
Maybe.
one of those many OTC providers here that are hitting us up on a.
I mean, you've got my tagline already. Don't confuse
Yeah,
complexity with value.
that's right.
Come,
That's right.
come eat at the trailing stop diner. Yeah.
I say trailing stops and more LLC,
Yeah.
but frankly, no more. Just
No more.
trailing stops,
No.
right? Yeah,
Yeah. Trailing
I
stops and
love
that's it.
That's great.
No, I got nothing. I'm glad we got a chance. Matt, good to talk to you again. Yeah, well, Rodney and I, we're putting together our plan for more regular updates next week. And so hopefully if we're any good at being as disciplined as we talk smack about, we'll be back in a little more regular fashion.
I
Yeah.
appreciate you
And
guys having me. It's been fun getting together with you guys again.
hey, Matt, before you go, anything going on at River Valley people should know about? What, like anything you want to plug on your way out?
I no, just we're here to help the farmer. I mean, service focused and trying to do the best we can and be nimble and make sure that we have the tools available, the flexibility, that you need from a service provider, right? I think sometimes, a lot of the companies get focused on what they need, right? Or what makes their life a little bit easier and not focus on what the customer's needs are. And hopefully we're focusing on, what the customer's needs are, right? The flexibility he needs to deliver grain, the flexibility he needs with payments, with splits, with, a lot of different things, that they need. And I think we do a great job of that as a company and as a farmer service oriented co-op. So along with offering the different types of risk management products that, some of those other companies, offer too.
Yeah, and I'll just say, like, I'm kind of a customer of River Valley Co-op through farmers, right? I don't take title of the grain or anything, but yeah, they're great to work with. So give Matt a call, check them out for sure.
We'll put Matt's email in the description.
That's right. Cool.
All
Well,
right.
thanks again, Matt. Good to see you,
Hey,
man. Gabe,
thanks for
have
having
a
me.
good
I
one.
appreciate it.
You
Have a
bet.
good day, guys.
Bye.
See
Bye.
ya.